Hey everybody, welcome back to my YouTube channel. Today I have a good one for you guys. I did take a trade this morning and I'll kind of go over why I took the trade, what was going through my head, what I saw in the market. But not only that, I did take a trade and it actually ended up being a loss. And I'll explain why that is because we did actually hit our take profit objectives and we did want to go in for a buy this morning and we did go in for a buy. So I'll kind of go over why it ended up being a loss and how that happens. So let's just get right into the charts. We'll start on the daily as we always do. And yeah, let's just get to it. The daily. All right, so today we did in fact have news at 10 a.m. It was orange folder news, and tomorrow we also have news at 9:15 a.m. So we have news basically for the rest of the week. So we didn't have high impact news today, but we did have orange folder news, and that can also be high impact news, so that was nice to see. All right, so the daily, we already know that we came off a very bullish run. Now I want you to look closely at Monday's candle. You see how we opened below, or we traded higher, never taking out the high of Monday and also never taking out the low of Monday. So technically right now we have an inside, or yesterday was an inside candle. So we closed inside the range of the previous day's candle. With that in mind, I was like, hey, we could potentially see one of two things. So today is going to be really slow as well, or we're going to be getting outside of that range of that daily candle. So I was really expecting us to trade into the weekly highs, which is this one, the relative equal highs, because these are now relatively equal. I wanted to see it trade into that. And I also wanted to see this new day opening gap traded into, just because it is a gap in the market. And then eventually maybe these will weekly relative equal highs as well later on in the week if we continue to trade higher. Today I did want to see some movement, but I came in with like a neutral mindset. I was like, I'm just going to see what the market wants to do. I don't trade for the first 30 minutes after the open. So I was just kind of like, okay, we're going to see what the market does. I would like to see buys. 1 hour. So we come down to the 1 hour. Now we had a very small opening range gap today, but I do like having the opening range gap close. So the previous day's close on regular trading hours, which is at 4:14 p.m. of the previous day. So I have this marked out here. I was like, okay, if we're gonna trade higher, I would like to see us come below that price and then go higher for like a Judas swing sort of type. On the 1 hour here too, we also have these London session lows taken out. We didn't get down to these relative equal lows, but we did take out this sell side liquidity which was London session lows. So London session lows are 2 a.m. to 5 a.m. Though the low during that time frame is the London session lows. And of course we did take that out at 6 a.m. So, all right, we already have like a higher time frame liquidity taken, and I really liked how these were all up close candles, breaking this high, you know, trading higher, kind of trading away from this new week opening gap. I was like, all right, maybe we have something here. Let's keep watching the market. So let's go down to the 15-minute. Okay, so we're on the 15-minute chart right now. So this morning I saw that the market drew into the 15-minute fair value gap, took out a short-term sell-side liquidity, while also on the 1 hour time frame we took out those London session lows, right? As you can see here, short-term sell-side liquidity taken, market traded down into this 15-minute fair value gap. Yes, just like by 1 pip, I think it was right on the top there, but it still counts. And this happened at 9:30. So this is what I like to see. I like to have, you know, that Judas swing kind of take place. So we did trade below the sell side liquidity and into this 15-minute fair value gap, which is a higher time frame objective of mine. And then we moved higher. So it was awesome to see the move higher because we wanted to see higher pricing. We wanted to see price actually leave this new week opening gap range, and the fact that we had a couple of up close candles out on the 1 hour, I was like, okay, we could potentially see some movement. So after we take out the sell side liquidity and trade it into the 15-minute fair value gap at 9:30, we traded higher. So let's go down to the 5-minute chart. We have our higher time frame analysis. We took out the London session lows on the 1 hour. We had a couple of up close candles on the 1 hour. We traded lower after 9:30 a.m. open, below the previous day closing price on regular trading hours. We traded below that short-term sell-side liquidity on the 15-minute fair value gap, and we traded into the 15-minute fair value gap imbalance. So we kind of have this kind of understanding that, all right, if we are going to go higher, we want to see a displacement run take place. We want to see break of market structure take place. Now, if we are going to go higher after taking out the sell side liquidity and trading into the 15-minute fair value gap. And we do, in fact, have that displacement run take place on the 5-minute time frame. We also have a break of market structure on the 5-minute time frame. So if you can see here, after we traded down into this I would consider a displacement run, because we have a nice run higher. We take out this high, so that could be our break of market structure. And something that I did today, I don't usually use them, but I used a breaker today. Just like for more information, I wanted to see how the market would react in this level. Basically, this candle right here, I extended it. This is a 5-minute breaker. So we have a low, high, and then our lower low. So I extended this candle right here because it was fuller bodied, and I moved it over here. I wanted to see price respect that level. I wanted to see price trade higher after reaching this level. And as you can see, yes, we traded higher, but look at the bodies right here. The bodies respected this breaker amazing, and the wicks went down into this 5-minute fair value gap right here. So even this would have been an amazing trade on the 5-minute time frame. We have the breaker confluence, our stop loss is well protected underneath this 5-minute fair value gap, and our drawn liquidity, which is that new day opening gap, is well more than 10 points away. So this would have been a perfect trade setup, break of market structure, displacement run, 5-minute fair value gap, even with the breaker for confluence, boom, after taking out liquidity. So keep in mind these levels when I go down to the 1-minute time frame. We have that 5-minute breaker, we have the 5-minute fair value gap. Okay, so we'll keep those in mind when we go down to the 1-minute time frame, because I'll kind of show you like what I was expecting. And of course, yes, like again, this would have been a great trade setup only because we did see it on the 5-minute time frame. It came down to the 5-minute fair value gap. We had everything in confluence with this, but I was already in a trade for the 1-minute time frame. So of course I don't enter more than one trade. I only have one trade a day, but keep these levels in mind when we go down to the 1-minute time frame. So 1 minute. All right, so we have our higher time frame analysis, right? We understand that the market wants to move higher, and we understand what we're looking for essentially now. We're looking for that displacement to take place. We're looking for that 1-minute fair value gap to take place. We already have our break of market structure. We already have this. We're basically looking for our entry on the 1-minute time frame. So my entry was right here on this 1-minute fair value gap, and my stop loss would have been just below that 5-minute fair value gap that we talked about. And of course, our take profit is of this new day opening gap. So this was essentially my trade. I wanted the stop loss to be below that 5-minute fair value gap. I wanted it to be below this 1-minute fair value gap, just in case we traded back down into that. And with the 1-minute time frame, we do like to take out short-term sell-side liquidity, so we did take out this sell-side liquidity before trading higher. Now, here's where I learned my lesson. So as you guys can see, if I had my stop loss placed where I wanted it to be placed, below that 5-minute fair value gap, before that 1-minute fair value gap, just in case it traded back down there. Again, it's only a 5-point stop loss. If I had gotten the entry that I wanted, however, when it entered into this trade, I got a fill that was about 0.5 points higher. Okay, so not so bad. Usually I just leave my stop loss placed, but I was like, you know what, I'm gonna move my stop loss higher just so then it's an exact 5-point stop loss. However, it would have been an exact 5-point stop loss if I had gotten the fill that I wanted at the top of that fair value gap, right? So keeping that in mind, I'm like, I should have kept my stop loss where I wanted it to be. But of course, today we're learning. I moved my stop loss higher just so then my fill, because my fill was right here, just so then my fill could correspond with the 5-point stop loss. And yes, sometimes this will work, but the fact is our stop loss was protected underneath this 1-minute fair value gap and the 5-minute fair value gap, right? We didn't want to see the market go lower than that 5-minute fair value gap. So when I moved my stop loss, it actually hit my stop loss. But if I would have kept it where I originally had it, we wouldn't have hit stop loss and we would have hit our ultimate TP, which of course would have been these weekly highs because that was about 5 points. This was actually 6-point run, and then the new day opening gap, which you guys seen, we did trade to. So because we moved our stop loss literally 0.5 point, we got stopped out because we had a bad fill. Not even that it was bad, it was just not the fill that we wanted. We got stopped out. Now, sure, it could have gone the other way, sure, but the fact that it didn't, and if I would have kept my stop loss where I originally intended to keep it, this is definitely a learning day for me for sure. So moving on, maybe I'll start putting a limit for where I want the market to enter me in, if that makes sense, putting a limit on that fair value gap so then I always get that perfect fill. And yes, just remembering that stop losses are important and where you place your stop loss is important. So with that being said, I did learn a lot today. Yes, we took a loss. Yes, it was a bittersweet moment because as you can see, the markets have traded higher. They went to our objectives. But what I'm taking from this is it's a learning experience. I learned more about stop losses and how having the correct stop loss can really impact your trading, even by 0.5 point. I mean, if we would have just kept it where it was, this would have been a winning trade setup. So making sure we have proper stop loss placement is key. And yeah, all in all, I'm really happy about this trade though. Like, it managed to do exactly what we wanted it to do. We traded into the new day opening gap, which was our objective. So sometimes it's just is what it is, I guess. But that is it for me. I hope you all enjoyed this video. I hope you learned something. Let me know if you want to learn something more, like talk about something that I don't usually talk about, or just kind of going over like the key setups. But I think this day is a win in my books. I definitely learned some things, and I hope you guys learned some things too today. So with that being said, I will see you all tomorrow. Bye for now.